Good afternoon, and thank you for joining our webinar. This is Michelle Savage with XBRL US, and you are here for our webinar on guidance, the Data Quality Committee 5th rule set and cash flow guidance materials. Just a couple of logistical points before we get started. If you have any problems accessing the audio or the visuals, please send us an email at support@xbrl.us, and we'll do our best to get you back up and online. Secondly, as we go through the program, you can submit questions to our speakers by clicking on the Q&A link at the top of your screen, and we'll get those questions and answer them as we go through. And third, we will be offering CPE credit for this program, and a number of you have requested CPE credit. If you have, please make sure that you respond to the questions that come up at 2 points during the program. And you'll see the poll questions on the screen. You'll need to click on the button to enter your response. And then once we're finalized, we'll get the CPE certificates out to you. So with that, I'm going to move ahead. This is a list of our speakers today. We have Amy Beers, who's the Director of Assurance and Advisory Services in Corporate Reporting at the American Institute of CPAs, the AICPA. We also have Campbell Pride. Campbell is President and CEO of XBRL US. And we have Lou Roman, who's the chair of the XBRL US Data Quality Committee, and he is also Vice President of XBRL Services at Merrill Corporation. And I also want to mention that Amy Beers is a member of the committee and very involved in the work that the Data Quality Committee performs. For our agenda today, we're going to give you a brief overview about the Data Quality Committee. Then we're going to go straight into the cash flow guidance materials. We will then focus on some of the new rule topics that relate to the cash flow guidance, and then give you an overview of how to participate in the public review and why that's so important. And then finally, we'll touch on some upcoming Data Quality Committee activities and other programs from XBRL US. So with that, I'm now going to turn it over to Lou Roman, and Lou is the new chair of the Data Quality Committee. Lou?
Thanks, Michelle. The mission of the Data Quality Committee is shown on the screen, is to develop freely available guidance and validation rules to eliminate inconsistencies and errors in XBRL data in order to enable automated analysis of that data. So simple enough, but the third word there is very key. It's freely available. These rules are free of charge, so filers can run the rules prior to filing, which of course we highly recommend, and especially prior to filing. That way you can detect any errors that may exist. But all that can be done free of charge. It is truly free to do that. And of course also free for regulators. It's free for consumers of the data and all others too. So it's one of the very beneficial things about the rules that are being created. And as it says in that, I'll go back to that first sentence, it says that it's, guidance and validation rules is what we do. That's what the webinar today is about. It's about guidance and validation rules that are being created. So the Data Quality Committee, it includes consumers of the data, professional organizations, service providers, the filing companies themselves, and more. So it's truly a group of all the functional areas working together to improve quality. On the next slide is the activities of the Data Quality Committee. 3 activities here. One is to develop unambiguous guidance on how to tag financial data using XBRL, and freely available automated validation rules to verify compliance with its guidance to prevent or detect tagging errors. That makes sense. The second one is to obtain input through public exposure of its proposed guidance and validation rules for a 45-day period. That's what is happening right now, because rule set number 4 and 5, which we'll talk about number 5 especially in this webinar, they are open for public comment. So number 2 is very relevant for what we're talking about today. And then the third activity of the DQC is to have regularly scheduled meetings with the SEC staff. And quite key, of course, because the SEC staff is truly monitoring the activities of the Data Quality Committee. So we meet with the SEC regularly, and we share what we are doing, and then what we as a group are what we're experiencing and what we're hearing related to XBRL data quality. So those are the key activities, and you can see the benefit not only to the filers, because they can eliminate errors or trouble within their financial XBRL tagging. And it also, of course, helps consumers because then they're much more easily can consume the data because it's error-free in this case. So that's a quick snapshot of the Data Quality Committee and its mission and activities. And with that, Michelle, I'll pass it back to you.
Great, thanks very much, Lou. We're going to take our first two CPE questions, and I'm going to pull up our first poll question, which you should be able to see on your screen here. And the first question is, what is the mission of the XBRL US Data Quality Committee? The first option is to develop freely available rules and guidance for issuers to eliminate errors in XBRL data. Or option 2, to develop freely available validation rules for data consumers to resolve issues in XBRL data. Or option 3, to expand the use of XBRL in multiple reporting domains. So please click on the button that you think best represents the appropriate answer, and that will record your response. So I'll just give a few seconds here to continue.
Michelle, can you break, the questions aren't showing on the screen. Could you just, it doesn't look at the CPE question.
Apologies. Okay, I just launched the polling. And hopefully that's visible now.
Yes.
Thank you. Okay, so again, click on the button that you think best represents the response. And then we'll move to the next poll question. Okay, we'll just take another 5 seconds or so. Okay, I'm going to end the polling on that question, and we'll move to the second question. And this question is, one of the activities of the DQC is to hold regular meetings with which of the following? With members of Congress, option 1, Securities and Exchange Commission staff, option 2, or members of international securities regulatory organizations, option 3. So again, please click on the appropriate response to record your answer, and then we'll close down the polling. Okay, I'm going to end the polling now, and we're going to move on to the next part of the presentation. Okay, I'm going to turn it over to Campbell Pride now, who's going to cover more information about the cash flow statement. Campbell?
Thank you, Michelle. So thank you everyone for joining. And today, what I'm going to do is just go through a very detailed document relative to cash flow guidance, which is on the website, and please look at that and provide comments on it. And so what we want to do today, though, is just to try to give you an overview and a flavor for what that guidance is and what are some of the main themes of that guidance, just so then that way you have a much better idea of what it's proposing. And if there's anything that you have a problem with, or you disagree with, or you think could be an issue, please provide a comment so that we can consider that. Also, if there are issues that you've had in the past with tagging cash flows, things that are unclear, or you feel like you've had to make arbitrary choices, please let us know so then we can clarify guidance on that as well. So that's the whole point of the public review, so that we can get this as simple to understand as possible and as easy to implement as possible. So the first thing that we've put in here is just some guidance on how to identify the cash flow statement. And generally this is done pretty well, but we just wanted to clarify it. So basically bring everyone's fact the attention that they should use the cash flow abstract as the start of the cash flow statement when you're pulling it together. And you can see there's there's on the slide here, it's just showing an example of what the presentation looks like for the cash flow, and you'll see there's that statement of cash flow abstract as the second element there. The other thing we did put in the guidance is also, and I think this is backed up with the SEC, but just to clarify it, you should be using the word statement. One of the problems for people when they're trying to pull the XBRL data is there's not standard identifiers for each financial statement. So a lot of people who are looking at this data will use the word statement and use the statement cash flow abstract as a way to determine that this actually represents a cash flow. And then, if you get a parenthetical disclosure, obviously always put the word parenthetical in if you've got parenthetical cash flow items. So, Michelle, if we go to the next slide, please. The next section here is just on the opening and closing balance of the cash flow statement. So there was there's a recent ASU that's been adopted, ASU 2016-18, and this has made changes to the cash flow statement. So this guidance is trying to be timed to go out with that ASU as well. And one of the things that ASU basically has is a new opening and closing balance for the cash flow statement. It's got to include restricted cash. So the balance sheet, the items for cash that you have in your balance sheet may not necessarily tie to what you have in the cash flow statement. There's supposed to be a reconciliation provided. But to make this easier from an XBRL perspective, to make it easy for consumers and I think for filers as well, the idea here is always to have the opening and closing balance of the cash flow always be the same element, and the guidance lays out what that should be. For obviously pre-ASU, it's going to be something, and then post-ASU, it's going to be something else, which is clearly laid out in the guidance. But then this way, it just means that you can, from filing to filing, you don't have to change the opening and closing balances that are in the cash flow statement. You don't have a situation where the element that you use for the opening balance is different than you have for the closing balance. So it just makes it significantly easier for people to tag, and it makes it significantly easier for people to consume. So if you're looking at the cash flow statement, it's always pretty much going to have those elements used for opening and closing cash. We've seen in the past some people have gone and picked a whole bunch of different cash elements potentially for the opening and closing balance. Some of them are incorrect, so that's also been documented in the guidance. So if you've used cash and short-term borrowings, for example, as the opening and closing balance, it basically clarifies what that is and when it should be used. So that's dealt with in the guidance here. So we go to the next slide, please, Michelle. Reporting gross items on the cash flow. So one of the main themes of the Data Quality Committee is to really use as the basis for the guidance is the codification. And basically what we've tried to do is link the codification and the guidance closely together and align that with the taxonomy. So if you know you're following GAAP, it should become very clear. Become very clear for people who are following the guidance, what the interpretation is. If the guidance is missing something, then you should be able to fall back to what the codification requires. And one of the items in the codification is the cash flow is that all items should be reported gross. You shouldn't be netting them. However, in a number of cases, companies will net gross receipts from, let's say, issuance of a bond or something against repayments of that bond in a subsequent period, right? So they use this element, increase, decrease, payment, repayment of debt. They kind of look like they're being netted out, but they really haven't. They're gross in each individual period. Now, people haven't split those into two elements in filings because there was an SEC rule that said, if you've got one line item in the if you've got one line item in your cash flow statement, you can't split that to two line items in your XBRL filing. In the recent release of the EFM, the latest EFM release from the SEC, which is the rules which guide how you do XBRL filings, they've relaxed this. So you can take one line item and split it in two. So if you've got gross items and you're netting them from period to period, using a net element from period to period, now you can split that into two separate line items. So that just clarifies that, and the guidance gets into more detail and gives a number of different cases of where that would happen. So if we go to the next slide, please, Michelle. Okay, so movement of element between classes. This is just making it clear that you shouldn't be taking elements from the US GAAP taxonomy that are operating and moving them into investing, or taking items that are investing and moving them to operating or into financing. So where the elements, what the elements are defined in, the structure that they're defined in the US GAAP taxonomy is what the meaning is. So in a lot of cases, people have taken items from the investing section and put them in operating. Let's say you're a real estate company, and you see an element in there for like something like a purchase of buildings, but it's really an operating activity for you, so you put it in operating. Please don't do that. There is, for example, in that case, there is actually an element for operating. So in a lot of cases, there are elements that are specific for operating and elements that are specific for investing. So there are a couple of elements which it's unclear whether we're investing or operating, relating to federal home loan banks. In the rules that we've created some exceptions for those, but we've asked the FASB to clarify what are operating and what are investing. So that just basically clarifies a lot of this. So if you do have a situation where you've moved them, then the rules that were attached will flag those. So then you should be able to identify an equivalent operating element. If there isn't one, please let us know, because then maybe we can go back to the FASB and suggest that a new element be added. So that's movement between classes. Next slide, please.
Campbell, we have a few questions that it might be good to respond to now because they relate to some of the previous topics. And the first question is, there's a possibility that users might use cash flow abstract in the footnotes as well. So using this abstract to identify the role might not be that effective. What are your thoughts on that?
Yeah, so the guidance basically says that you should also use the element in the description. You should also use the word statement. So the guidance. So basically, if anyone's looking for the cash flow statement, they should look for the word statement in the description. So, and also the cash flow abstract in the presentation. So if you're looking for both of those, then you're going to get the right document. But if you're a filer preparing a filing, then make sure that obviously if it's the cash flow statement, use the word statement. The disclosure, obviously, in the body of the financial statements is then obviously not going to have the word statement on it.
Okay, and the next question, on reporting gross items, if there is a net element reported, how should that be handled?
Okay, so if there's a net element reported, if it legitimately is net, then obviously use the net because they've netted it. That doesn't necessarily comply with GAAP, however. So it's unlikely someone's going to have done that. And what typically happens is when they've reported the net element, it's really they've taken in one period it's going to be the gross, and the next element it's going to be in the next period it's going to be the gross. So maybe in the first period it's, hey, this is the amount of money we received from getting the loan, and then the next period this is the amount of money we paid back for the loan. Most of those amounts are gross, but they had to use the net element to indicate that in one single line item. So really, if you have that situation where you have an amount is positive in one period and negative in the next period, you may want to go back to the company and say, look, are these really a full amount are these really netted across within the period, or are they just netted across periods? And then if one is the full amount that we received for the loan and the next period is the full amount we repaid, then you may want to consider then splitting that net into two elements.
Okay, great. I think that actually answered another question that someone else had. So should we move on to the next slide?
Yes. Issuance, and this is kind of related to the same thing. Issuance costs on equity issuance. This is just really making it clear. If sometimes we've had folks report, funds received from issuance of equity, and they've got a negative amount. And really what that negative amount reflects is the cost of the issuance, and there's a specific element for that. So in these cases, use the cost of issuance element. So, and this was and this couldn't be done before because, items had to be collapsed onto one line item. So you'd say, receipts receipts from issuance of equity, and in the first period it would be a big positive amount, but in the next period it's a negative amount, and that negative amount really represents the cost of the issuance. Now they should be split, so now the cost of the issuance would be a positive amount, but it would be the actual true cost of the issuance. So that is then clarified in the guidance, and there's a few examples there. The next item is this is just really things like a number of extensions in the cash flow, and this is just an example of this. So if you're going to create an extension in the cash flow, you may want to look carefully just to make sure there isn't another element which really represents the same thing. And one particular area where there's a lot of extensions, and we just wanted to clarify this because there is an element, and that really relates to non-controlling interests. And so in some cases we're seeing extensions like proceeds from sale of subsidiary stock ownership, right? So basically what this means is I've got the parent company's reporting, and it's got a subsidiary, and that subsidiary has, let's say they've issued some stock, and they've received funds for that. So what that means is, some will say, oh, we've got proceeds from sale of a subsidiary, but the element, it's really the same as proceeds from minority shareholders. Basically what you've got is you've increased your minority shareholders in your subsidiary, so then that's the element you should use. And then the same on payments to minority shareholders. This is where you may buy more shares in a subsidiary, or you may purchase subsidiary stock, and then that's really more payments to minority shareholders. Obviously, that only applies in the case where you've got more than 50% ownership in the subsidiary. But it's a matter of just being clear and just looking at, okay, it's worded differently, but effectively the transaction is identical. If we go to the next slide, please. Okay, so aggregate movement in cash flow. So this is really just using if you're going to change in cash, it's just really make sure everyone's consistently using the aggregate change. Sometimes we've got folks using the continuing ops tag because everything's continuing ops. Sometimes we've got people using the continuing and discontinuing ops tag. And effectively, you've got the same company, same set of situations, but they're using different concepts to reflect that. So this just basically clarifies that. So basically, the main gist of it is, if you got net cash provided by used in continuing ops, don't use that to represent the aggregate change in cash. There are specific elements that represent the change in cash that have been come out of as part of this new ASU. So if you've adopted the new ASU, this is a good chance to change it, and that's really going to be the cash equivalents, restricted cash, and restricted cash equivalents, period increase decrease should be the elements that's used for that. You still should use that element even if you don't have restricted cash. It's kind of a catch-all for every single possible change. The fact that restricted cash is in there doesn't mean that you actually have restricted cash. That element just really represents this long worded element, but really it is just the total movement in cash for the period. We should go to the next slide, please. Okay, so accrual items in the cash flow statement. So this happens quite a bit, but this really only applies to the investing and financing section of the cash flow. So this is basically these items are true cash items. Obviously, the accruals appear in the operating section if you've used the indirect method, but in the investing and the financing section, you shouldn't find yourself using accrual items. So this may be things like you paid a dividend. This is pretty common. Things like dividend common stock appears in the cash flow statement. This item actually represents the accrual. It doesn't necessarily mean there's a cash payment. So the appropriate element to use would be payments of dividends common stock. This is surprisingly common, so just be careful with this. We've added a rule in for this, so you can test for this. So this will go and check if there's any elements that appear in the income statement or the statement of shareholders' equity, and make sure none of those elements are being used in the investing or financing sections of the cash flow statement. Okay, so we'll go to the next slide, please. So reconciliation of net income. So this is basically just to get consistency across the board on this. And some people use net income loss, some people use profit loss. So basically, when doing the cash flow, it's just saying really you really want to use the starting point of the reconciliation has to be the net income excluding the non-controlling interest. Obviously, that's all going to be included in the cash flows. So you really want to start with the element which is profit loss for this. And this is just so basically sometimes you'll have net income loss in the cash flow statement, they're the same amount, but start with profit loss. So it's just clear that this is, we're saying, you're not going to have, shouldn't be having net income loss in the cash flow statement. Unless you do have net income loss and then you add back the non-controlling interest to get to the profit loss, then obviously that's going to be okay. And the rule won't flag that. Okay, next item, please. Calculation weights and the balance attribute. Okay, so there are a lot of problems in the cash flow statement with two things: incomplete calculations and calculation weights that are incorrect. This is problematic because what happens is, to make the calculation work, people will flip the signs on the values that they reported. So to fix this, there's a rule just to make sure that this works correctly. And one of the reasons this happens is because in the indirect cash flow statement, the elements roll up into this a catch-all adjustments element for cash flow from operating, which doesn't have a balance type on it, which means that one of the XBRL validation routines, which makes debits can only be added to a debit to get a debit, doesn't apply. So basically, the guidance and the rules make it clear that this, that if you're rolling up into that adjustment item, it should be treated as a debit. So items like, expenses like depreciation should always be added into that adjustments total. It shouldn't be put in as a negative and the depreciation amount put in as a negative. So this just there's a rule that's associated with this. This just makes it clear, just to tidy this up. There are a lot of filings. People may not even be aware that they have this issue, but basically what it means is the weight is incorrect and the signs, more importantly, they've entered an amount which should be positive as a negative. If we go to the next time thing. Okay, so the calculations associated with the cash flow statement, they must be included in the role associated with the cash flow statement in the filing. The calculations for the cash flow statement should not be put in a different role in the cash flow presentation tree. So it's put the cash flow associated with the calculation in there. The other thing is, and it should start, the cash flow for the change in cash should start with a single durational element. Now, what we see is these cash flows are incomplete because for some reason they can't get it to balance. I'm not sure why. So what you should have is you should have the start of that cash flow for the indirect cash flow in particular should start with the change in cash for the period, and then you should have the investing, the operating, and the financing as the next elements, and the tree should obviously scroll down. Because people can't get the cash flow to balance, what they'll do is the trees are incomplete. So we put a rule in there to check that if you're reporting a cash flow, then you should have a complete calculation that should be rolling up to that increase and decrease in cash for the period. So this is just a reiteration of this. This is how you should be doing it. So next slide, please. Okay, increase, decrease items with different balance type. So there are, in the cash flow, the indirect cash flow, you can have an increase, decrease in assets and liabilities. As part of those, there are a number of elements that are also used in the roll forwards and other parts of the taxonomy for an increase or decrease in, let's say, for environmental liability, or for ARO is a good example, right? Those increase, decrease elements basically reflect the change in the asset account. So if it's a increase, decrease in ARO, then that increase, decrease is going to be from the side, from the perspective of the asset or the liability, depending on what it is. Those elements cannot be taken and used in the cash flow statement. The elements that are provided in the cash flow statement reflect the change in cash, not the change in the balance sheet account. So the reason this is a problem is the amounts may be the same, but the balance types on those elements are the opposite of what you would expect. So what happens is, if those elements are used in there, the signs or the values will be the wrong way around. So this is confusing. People trying to confuse to use the data, because usually the values are going to be incorrect because they have the wrong sign on them. And secondly, there's usually an element that's already in the cash flow representing that increase or decrease. So you can basically see it as two different sides of the journal entry. The ones in the cash flow represent the impact on the cash. The ones that are in the roll forward represent the impact on the underlying asset or liability. Okay, next one, discontinued operations. Now, this is one of the big bugbears with the cash flow statement, and US GAAP in general is you have a lot of choices around how you can report discontinued operations in your cash flow, right? And the guidance lays out all the different options that people use, and then what you should do in each of those different circumstances. The one area which the US GAAP taxonomy hasn't really addressed is if a filer breaks up their cash flow statement, their cash flow statement for the operating activities. For an indirect cash flow, let's take depreciation as a good example. Right? Depreciation that's reported, it's kind of assumed that it's the continuing op portion, and then if you've got a discontinued amount relative to depreciation, that could be reported beneath that item. So what can happen, there's a number of cases where somewhat the depreciation on the income statement may be different from the depreciation on the cash flow, because the depreciation on the cash flow represents continuing and discontinued ops, whereas the depreciation on the income statement represents continuing operations. So in many cases, there are not elements that represent the depreciation that includes disc ops. So in the guidance, we've put some guidance, how you should handle all of these situations. And so we in some cases you have to create extensions, but we've provided guidance. If you're going to create an extension for this, then maybe then add a suffix like discontinued operations on the end of it. And then obviously you want to make sure that extension element is included in the calculation tree of the cash flow statement. The guidance, there's multiple pages on how to handle discontinued operations in the guidance. So if you have that situation, you're concerned about it, please read it, and then get any comments to us if anything's unclear. Just one thing on that previous slide, there's something mentioned as an anchor. It's just a question pop up on that. So we've put that in just at the moment. So there is work going on to define what how you relate elements to each other. So basically, this is guidance, hasn't been finalized yet, but it's basically details. If you create an extension element, there's this idea that extension element should be linked to an element somewhere else in the taxonomy. So we reference it here, and if you see this, there's a note to it. But basically, this is follow the guidance that's due to be released in the next couple of weeks. So if you want to go to the next slide, please. Okay, continuing ops. Now, this is a change in guidance that had been issued before, and this is really just to align everything with the new ASU. And to feedback that we've been getting back from consumers, the data. So basically, generally the EFMs is used the more specific guide, specific concepts. And for this case, there's a kind of an exception to that. And this is basically saying, look, if you don't have any disc ops, just use the elements for investing, financing, and operating. But if you do have disc ops, then you may want to split it up into continuing and discontinued operations. This is just, this is kind of, there's been arbitrary concept selection on this. This is just basically trying to align it with what the codification says. So this actually would be quite a few changes in a lot of existing filings. Half companies do it one way, half companies do it the other way. So this is just basically clarifying what you should do in this situation. And if you're updating for the ASU, this is a good time to make the change. Obviously, you're going to have to update your cash flow statements anyway as you move to to the changes in the ASU 2016-18. So then this is a change that can be made at the same time, so that we don't have to do any of the changes going forward. Okay, if we go to the next slide, please, Michelle. Okay, so dimensions used on the cash flow statement. So the guidance kind of tries to address this issue, and generally, it should be relatively rare that a dimension should be used in the cash flow statement. However, there are some cases where it may occur. One, particularly for utility companies where they report multiple legal entities. So obviously, multiple legal, cash flow could be broken up across multiple legal entities. So that's one case. However, there are some cases, and we give a specific example in the guidance where it may make sense to do it, just because you would have to create a whole bunch of extension elements for the cash flow. And this is, the example in the guidance really deals with the filer has broken up the cash received and repaid for the issuance of multiple different securities, and they've specifically identified all those securities that they've issued cash for. So there are some restrictions on when you should use dimensions. If you can use an existing elements in the taxonomy, then don't create it. If they already exist in the cash flow statement, then don't go and create a dimension for it. If the axis is not used anywhere else in the filing, then don't create a dimension. And so basically all of these, the things you need to consider are laid out in the guidance before you really want to start using a dimension. We introduced the idea of something called a well-behaved dimension. So basically this is if you've got anything that's in the financial statements and you're putting a dimension on the financial statements, all the components of that dimension should add to the total that would be reported in the financials. You need to have all the components so that your balance sheet balances, your income, your net income can be calculated, or your change in cash can be calculated, or your change in shareholders' equity can be calculated. Okay, let's go to the next slide. Foreign exchange. There's new elements as part of the ASU provided for foreign exchange, but we just thought we need some clarification here because there's some subtle differences the way people do this. If the exchange rate translation out is disclosed but is not included in the calculation of the increase decrease, then which element should you use? If they specifically excluded it, then use the excluded element. And if they haven't reported, if you've got the aggregate change, it's always going to be assumed that it's going to include the period increase decrease is going to include the change, the effective change in exchange rate. Don't use that element if it's before the change, the impact of the exchange rate translation. And so this is basically, it's pretty simple, but this is just basically laid in the guidance just to add clarity to that issue. Okay. Operating interest payments. This may affect, this actually has quite a large impact, and it's a small change, but basically it's basically just saying, which element to use. In the supplemental cash flows, we deal with some other issues, obviously, for acquisitions in the supplemental cash flows. But this item that had come up and had been communicated to us from people trying to consume the data. So in the supplemental disclosure of the cash flow statement, you're supposed to report the interest expense. Or not expense, but the interest paid relative to your operating activities, right? So there's an element in the taxonomy for that. And that element is interest paid net, right? So that represents the interest that you've paid related purely to operating activities. Now, that's required disclosure under US GAAP. However, most people haven't used interest paid net element, they've used the interest paid element. Now, interest paid represents the interest from operating and the interest from investing. So it's kind of the aggregate of the two. Now, in many cases, obviously, the values are going to be the same. But what the guidance is saying here, look, the requirement in the codification is if you've got an indirect cash flow, then you've got to make a supplemental disclosure around how much interest that was paid was applicable to operating activities. So, if that's the required disclosure, you should be using the element which reflects that, which is interest paid net, not the element which is interest, interest paid for operating and investing combined. So that's just to clarify this is, the FASB's looked at this and they agree with this as well. So, I'd recommend just, if this is the case, changing this element when you, if you're doing the update for the ASU, you need to change the change in cash as well. Just on the ASU change, a number of people have already adopted the ASU, but they're using the 2016 taxonomy. The new elements are only available in the 2017 taxonomy. If you're doing that, make sure that you take the element name from the 2017 taxonomy and create it as an extension in the 2016 taxonomy. We put a rule in for this. If the name in your extension doesn't match, then it's gonna flag a problem, because it's going to say, look, there's no change in cash. But if you get that error, then just go and check and make sure that the element name's the same, and that includes making sure that the case of it is the same as well. So that's just something to be aware of, and then that should make it easier when you move to the 2017 taxonomy. You shouldn't have to go and re-tag that element. Okay, next element. So I think that's everything I was going to cover. So I'll hand it over, and we can and Lou's going to talk about the new rules.
Thank you, Campbell. So what's on this slide and the next two slides are it's a list of the new rules in rule set number 5 that are now open for public comment. So there's a total of 17 rules, which includes, and let's go to the next slide. The 17 rules include the ones on the prior slide, and here's 6 more of the 17 on this slide. And if we go to the next slide as well, there's another 5 that make up that 17. And interestingly on this, these are the same rules that Campbell has just been talking about. But here they're put into a rule format to test and detect that the filing is abiding as much as possible that we can with these rules with what Campbell's talking about. So these are the actual rules themselves. If you remember, Campbell was talking about that first one on this slide, cash flow opening and closing balances. He was talking about whether or not they need to be the same. So let's take a look at one of these specifically, because the question becomes, how do you know what these rules are? How can you find out and understand more about any given rule? Let's click on, if we look at the bottom one, which he was just talking about, interest paid net operating, not on the cash flow. If we click on that 0065, it'll take us to the XBRL US website. So here is the way to understand any given rule. Again, these are easy to find on the XBRL US website. So this one, as it says under the orange part, is rule DQC 65. That's just the number of the rule. And the first thing you'll see within this given rule on the XBRL US website is a rule function. So I'm going to read that first sentence. This rule identifies those cases where the filer has included the element interest paid as a presentation link-based descendant of the element supplemental cash flow abstract, but the filer has not included the element interest paid net as a presentation descendant of that abstract. So that's a problem, because as Campbell was saying, interest paid net is really what needs to be disclosed and is shown separately in the supplemental cash flow section. We often see this error where a company uses interest paid tag and they should be using interest paid net. It's more common than we would like. So this rule has been created. If you are a filer, take a look and make sure, but running this rule will do that for you in the cash flow statement. So the next section within this explanation of this rule is called problem solved by the rule. This rule supports the recommendations of the cash flow guidance, and that's the guidance that is part of this public comment as well. The FASB codification requires that filers who report their cash flows using the indirect method publish their interest paid during the period net of any interest paid for capital expenses. So that sentence has nothing to do with XBRL. It's the FASB codification says you must disclose in this fashion. So this rule takes that and says this is the way the XBRL should be. And the last sentence in that paragraph says this rule helps to ensure that companies use the element interest paid net instead of the element interest paid in those situations. So One other thing we want to do when we're showing an explanation of this rule is the next heading, which says an example rule message. So this is showing you what you would see if you run the rules and you do have this error. It simply says the supplemental cash flow section has reported a value of $148,203 for the element interest paid, but the element interest paid net is not included in the supplemental cash flow section. Interest paid net of capitalized component must be reported. So it's telling, and then it goes on with more information here too, including specifically where that error is. So this is giving you an example to say, here's what it would look like if you do have this error. The next section below that is for developers, and I won't go through that in detail, but it shows the global rule logic and some interesting things like that. Someone said to me on this rule about interest paid net, and the question was, what if I do the cash flow using the indirect method, but my interest paid is immaterial? So I'm not disclosing that in my financial statements, and obviously then I don't need to use the tag interest paid net. This rule would run an error for me, is what their question was, because I'm not using that, and it says I need to be using it. Well, fortunately, we've thought about that and those types of things, because this rule properly would not create an error in that situation, because the erroneous tag interest paid would not exist in the supplemental cash flow section, and therefore that situation that I was asked about is properly covered by this rule. Many of those things like that have been thought about in these rules. There's a lot of depth of input and logic that goes into these rules. But interestingly, and the best part is, even if we scroll down below this for developers section, there's an area for your comment. So this is where you can put in any comments related to the public exposure. And if you disagree with the rule, or if you just have further input, please add a comment in this area. So let's go back to the slides. And I want to show you one thing. Let's go back one slide to, let's just pick the top one there, Rule 49, and click on that 49. In this situation, fortunately, and this is a different rule, fortunately you're going to see that each rule has the same and uniform layout, which I think makes it a lot easier for anybody to review that rule. And by showing the standard format, it gives you all the info that you need to understand the rule. So all these are done in the same way. It makes it much easier to review. So this is the way, going to the website, you can understand the detail of any given rule and see what's currently out there for public comment. With that, Michelle, I'll pass it back to you.
Lou, thanks very much. We're going to go back to the slides again. And I'm now going to turn it over to Amy Beers.
Hi, thank you. Good afternoon, everyone. So obviously, Lou and Campbell have taken you through the guidance and the rules that have been developed. I just want to remind you that we've obviously gone through a pretty thorough process in developing these rules. We've gotten feedback from different stakeholders who are on the committee. We also, as Lou mentioned, we meet with the SEC on a regular basis and have presented this guidance to the SEC staff. And we also have the FASB as a permanent observer to our committee. So the guidance has also been presented and reviewed by the FASB staff. But that being said, a really important part of this process is to open this up to the public to obtain feedback. So this helps us ensure that the guidance is understandable, that people agree with it, all different stakeholders agree with the approach, that when it's implemented consistently, so that it will ultimately improve the data quality and lead to more comparable filings, which will improve the usability of XBRL. So what I'm going to cover today is how to participate in this public review and how you can provide your feedback on the guidance and the rules. You'll also be able to check your own filings against the rules, run the rules to see how it impacts your filings and whether you agree with them or not. And obviously, we want you to let us know that. There's certain software that has been certified that it runs these rules correctly, and I will show you where to look to get a most current listing of those applications, and talk a little bit about our upcoming activities of the committee. So I'm going to share my screen. Give me 1 second. Okay. Now you should be seeing my screen, which is the XBRL US website, and I am in the data quality section on the public exposure of the guidance and validation rules. So here we have a link to a PDF, and that PDF is the guidance. And this guidance document takes you through all the detailed information that Campbell took us through today, as well as a listing of all the rules that we are exposing. So you can download this PDF, take a look through it, read it, and then come back to the website and provide your feedback. When we go back to the website, you can give us feedback on the rules. Now you'll have to be logged in, and you may need to read the terms and agree to them. You can either type within the box your individual comments, or you can upload a document, a letter to us, PDF or Word or Excel, and the committee will accept all these comments and will be reviewing them at our next meeting. So that is how you would comment on the rules. Now I'm going to go over to check your filing, and again, you'll need to agree to the terms, read through the terms and agree to them. But here you can click on which set of rules you want to review. So if I'm looking at the new rules that relate to the cash flow guidance that are open for public exposure through September 5th, I can upload my own filing here and click check filing. Now I've already done this because it takes a couple of minutes. So, oops, sorry. So when you run the rules, you're going to get a report, which will show you the errors listed by rule, and it'll give you those message details that actually Lou took us through and explained in the message. So going down here, DQC 0065 is actually that rule related to interest paid net in the supplemental section of the cash flow. So this filer has an incorrect tag for that concept. So again, this is really a good tool to use to be able to check your own filings, to see how these rules impact your own filings. And if you disagree with how these rules are run against your filing, please let us know. That's really key. We really want to tweak these rules as much as possible so that they're as applicable as possible. Now, I mentioned there are a list of software applications that run these rules, and here you can come on to the website and get the most up-to-date list. These applications have been certified by XBRL US to run the latest versions of all the rules. So please check here often to make sure that your service providers are updating their applications. And finally, just to stay abreast with the activities of the committee, our next meeting is Wednesday, October 4th. You can always see that on the Data Quality Committee site. We will be meeting, the comment period will close, so we will have the opportunity to review all the comments, and we'll be discussing them at our next meeting. You can see our recent meetings, the agenda and materials, and you could also see some of the highlights from when we meet with the SEC. So
just to add
yes.
one thing to that, Amy, just in terms of the rules, the rules that we currently have are proposed rules, so no software yet has necessarily gone and incorporated them, so they haven't been certified. They're only for rules that have actually been approved today.
Right. Okay, Michelle, I'll hand it back to you.
Great, thanks very much, Amy. Okay, I'm going to go ahead and share my screen again now. Okay. Okay, and next we're going to go through a couple of CPE questions. And so if we can, I'm going to bring up our next poll. Okay, so for those of you getting CPE, please make sure that you respond. So the question is, according to the DQC guidance on the statement of cash flows, the element used for the opening and closing balance of the cash flow statement should always be different, option 1, should always be the same, option 2, or can vary depending on the financials of the issuer, option 3. So if you can please click on the button to record your response. And we'll give this another 10 seconds or so. Okay, we're going to close this poll in just about two seconds. Okay, let's go to the final poll question, which is, according to the DQC cash flow guidance, which of the following concerning the use of dimensions on the cash flow statement is a true statement? Option 1, dimensions must never be used on the cash flow statement. Option 2, dimensions are generally not required on the cash flow statement, but there are some situations where they may be used. Or 3, every cash flow statement should use dimensions. So again, just please click on the appropriate button. And we're going to close the poll in about 5 seconds. Okay, great, thank you. Okay. And now we're going to talk a little bit about some upcoming events. And just to reiterate what Amy had gone through, the public review period can be accessed at this URL. The closing date for the 4th rule set is August 15th. The closing date for the 5th rule set is September 5th. And then we also have another webinar coming up on August 23rd at 3 o'clock, which is the IFRS Taxonomy Deep Dive. This is specifically for vendors and data providers, although issuers are welcome as well, and it will take a more in-depth review of the IFRS taxonomy and respond to some questions that people have sent in. And then we did have another question from the audience, which I think may be best answered by Amy, which is there a planned release date after the review closes September 5th?
At this point, we don't have a date. It's obviously going to depend on the comments that we receive. The committee's next meeting is October 4th, so if comments can be cleared in time for that meeting, the committee may approve the rules at that time, and they'll probably be ready for the end of the year. That is the plan at this point, but obviously it will depend on any comments we receive.
Great, thank you. Okay, well, I want to thank all of our attendees today, and I want to thank our speakers very much. Lou Roman from Merrill Corporation, who is now the chair of the XBRL DQC. Amy Beers, also a key committee member who is with the AICPA, and Campbell Pride with XBRL US. So thanks very much, and we hope to see you at our next event on August 23rd at 3 o'clock, and at other future events. Thank you.